Really excited to be here today. Just really quick, let's just introduce ourselves. I'll pass it to Emil first, since he's the better looking of the two.
I don't know about that. You don't mind if I take this out?
No, go ahead.
All right, perfect. I like to walk around when I present. So me and Gerard met 6 years ago at a local bar at a meetup called Cryptocurrency. I think government blockchain was there. I think there was 10 or 20 people part of it. We went down the route of the rabbit hole of blockchain and cryptocurrency and never came out. Good times. Great guy, great mentor of mine. I've learned a lot. I manage a company called Cryptolitics right now. We run a very unorthodox crypto hedge fund. We also build miners, and we consult with mining companies like Riot and Mara. I had a great conversation with CEO of Mara about a week ago about the future of mining. And then also I am one of the, I sit on the board of a very interesting startup called EloPitch.
Awesome. Thanks, Nabil. And I'm Seth Wilkes. I work with TaxBit. TaxBit is a crypto tax and accounting platform. We work with individual investors. We work with enterprises, exchanges, businesses who are accepting crypto as a form of payment for goods and services. And then we also work with governments. So we work with, here in the US, we work with the IRS to help them with audits. We help also build out infrastructure systems to help them support the massive amount of data that they'll likely be getting over the next couple of years. But on top of that, I spent a little bit of time with our lobbying efforts. And so I spent a bit of time on Capitol Hill and really trying to educate people on what is blockchain, what is cryptocurrency, digital assets, where is it going, and how do we create policy that makes sense, that doesn't get in the way of innovation, but does put some guardrails around it. And so really excited to be here today. So we're going to kind of talk about just some of the basic things. And I'll take this first part. So there's a few questions that the Government Blockchain Association have put out there. And one of them is, how and where are blockchain profits taxed? And the question is, I think it's a little bit hard, because if you can imagine, all of these politicians around the world, can you imagine them coming together? And this will kind of address the second bullet point too. But can you imagine all of these politicians around the world coming together and actually adopting one standard? That's probably not ever going to happen, right? And so what I think is more important is, number one, the first part is, where is it taxed? Most likely, most countries that I've talked to, it's really going to be where that individual happens to live, not necessarily where the blockchain happens to be. Obviously, the blockchain is all over the place. So how would you tax that in multiple countries? But it's really going to be most likely centralized where the individual investor happens to be, or individual miners. The second part, again, is, will we ever standardize taxes around the world around blockchain and crypto? And I just don't think that. It's like herding kittens, to get everybody together. And really, what I think, though, you will see is that there are certain organizations like the OECD, where you've got 40 or 50 member countries who have come together, and they are adopting more standards for information reporting and information sharing across those member countries. And so we absolutely will see more standardization in that regard. But before we get too much deeper into that, we should just get into kind of the basics of taxation and crypto. And so I'm going to hand it to Nabil, let him run with this.
All right, two things are guaranteed in America: death and taxes. And I know nobody likes to talk about taxes in crypto. I think the reason is because the US government has been confused themselves, right? I've talked to a lot of people from the IRS. A lot of my clients in my hedge fund ask me about taxes. And every year, I think the law changes somewhat. But one thing is for sure, right? We get capital gain tax. So long term, if you hold any cryptocurrency, maybe Bitcoin, Ethereum, Cardano, if you hold it for more than 365 days, you get the standard long-term rate of 15% on the gain. Short term is a lot higher. It all depends on your tax bracket, right? If you're making above 6 figures, it starts at 30%, goes up to 43%, I believe, if you clear more than $465,000 a year. So that's a given, right? That's just the standard. The biggest problem I've noticed in crypto, personally trading as well, and my clients do, is say I buy Bitcoin from Coinbase. And we'll go into detail here, right? This is what I really want to explain to people and help them understand. I buy Bitcoin from Coinbase because my bank account is connected. Then I move Bitcoin to, say, for example, KuCoin, right? I move it to KuCoin and I want to buy XRP, or I want to buy Theta, or I want to buy altcoin using Bitcoin as the base currency. That transaction of buying Bitcoin and getting, say, Theta or Cardano is a capital gain event. You are technically not selling Bitcoin, but you are in IRS's point of view. So that's another step, right? You're going to say, I bought it, say today, I sell it tomorrow, just for argument purposes. Say Bitcoin's at 30,000 today. I bought it from my bank account. Tomorrow it's 35,000. I sell it on KuCoin for XRP, for example. Well, that $5,000 capital gain is captured. Then let's take a deeper step, right? I buy Ethereum from KuCoin. Now my base is Ethereum. So you're going to record the basis of your buy rate on Ethereum, and then say with Ethereum you buy Shiba or you buy XYZ. Every transaction is a buy and sell. And whose responsibility? This, I believe, is the biggest challenge that the IRS faces right now. Currently, the responsibility lies on the individual and the account holder. And well, 90% of the people don't even know what they're supposed to do, because they're used to Ameritrade, Robinhood, that give you a 30-page transaction list in the 1099-B, where they record every buy basis, you know, how much you bought, the quantity, the date, the time, and then when you sold it. It's the responsibility of the brokerage to report it. In crypto's case, currently, it is not the responsibility of Coinbase or Gemini to record these transactions and send you a 1099-B. So the biggest challenge people face is that they've done, say, 100 transactions. Out of the 100 transactions, they haven't recorded every transaction, right? You can transact crypto 30 times in a day, and recording the basis of each sell, buy, quantity gets very difficult, where most people don't do it. And I think he has a great solution for that, and I'll let him talk about that. But I think that's what the challenge has become. What I see the future, and I believe in the early 90s, even stock market brokerages were not giving a detailed 1099-B transaction report. So I think eventually Gemini, Coinbase, Binance.us will be required to give a detailed report. But as of now, the responsibility falls on the trader. Like what I personally do is I keep an Excel. Every time I buy or sell a crypto or trade a crypto for another crypto, I put in the date, I put in the basis, what I bought for, and what I sold for, right? I mean, that's the clearest way you can do it. There are some great softwares, and I'll let Derek talk about the software solutions that he has.
Awesome, thank you. So Nabil is completely right. Like it's a record-keeping nightmare. That's really the biggest problem. And so far, up to this point, specifically in the U.S., it has been placed. The responsibility has been placed on the individual to have to track and take care of this. And these are, you know, they're not terribly complex rules, but they're not things that most ordinary individuals really know and understand. And so, number one, Nabil, we need to get you a TaxBit account so you can get away from your spreadsheet, so we can track those for you. I agree. But more importantly, though, the fact of the matter is, we really do have to move the responsibility from the individual up to the enterprises, because this is really how it's been done historically in every other asset class like securities and commodities, as Nabil talked about. And the fact is, Nabil's completely right. Even in the stock market, or the stocks and commodities world, they did not report cost basis. I think even pre-2005, and so that was not that long ago, and clearly we've been trading stocks for many, many decades. So this is an important move forward. And so one thing I want to talk about now is exactly what we're doing in the US to solve some of these problems. And a little bit, you know, one of the, I guess, when you think on a global scale, the US is unique, I think, in a lot of ways, because the US loves information. Like the IRS loves to get detailed transactional level information, whereas a lot of the other governments around the world, they prefer to get aggregate information. So like I talked about OECD a little bit before. OECD in the past has required, when you have stock trading and things like that, they just want to see an aggregate number, right? And at some point, if you as an individual and, if you are from Spain, you get audited, you still have to give all the details to support what you did. But the information that the enterprises or the brokerages had to report was just one number, okay? Now, in the US, we don't like to do anything simple. We like to make it complicated. But I think that it actually makes it a little bit easier for the individual, because how much nicer is it for an individual to get a full report from a Coinbase or a Kraken, and all they have to do is upload that into TurboTax or hand it to their accountant to go and file. So back in November, here in the US, we passed the infrastructure bill. And I keep on calling it a bill, but apparently I need to call it the Infrastructure Act now, because it actually has been signed into law. But I will have a hard time changing that. And there are a few things that they had to change and update in the code to be able to really encompass and make clear that cryptocurrency exchanges are included in these provisions. So the first thing that they talked about was the definition of a broker-dealer. And this is probably actually the most controversial part of this law. And the first thing it did was it made crystal clear that exchanges like Coinbase, Kraken, Gemini, they are absolutely a broker-dealer, which means that they have a responsibility to file a 1099 at the transactional level. So every single time, like Nabil talked about, he went from Bitcoin to ETH to Cardano to anything like that. All of those are transactions that have to be reported back to the IRS. And Coinbase and these exchanges have a responsibility to track this information and then provide it to you as the investor and to the IRS. So that was pretty easy. I mean, these brokerages or these exchanges, they operate a lot like the traditional stock brokerages anyway. So that was kind of like low-hanging fruit, right? The controversy around this broader definition, though, is that there is debate about whether that definition includes hardware wallets. Okay, as we know in the blockchain world, that you can actually store your crypto on these different hardware wallets or software wallets. There's a question about whether they fall into this definition as a broker-dealer. There's also a question about whether protocols like Uniswap and Binance Smart Chain and all these other, whether or not they fall into the category of a broker-dealer. And that gets a little bit difficult, because when you think about, Coinbase has systems in place where they're doing KYC and they are validating who is trading on their platforms. But then when you get to software protocols, the argument is this is software. This is just a protocol that's out there in the ether and that it's operating. Who's collecting the information? Who's doing the reporting? And so I think that there is definitely some interesting things that could happen down the road as Treasury interprets this new law and to see what happens with it. My guess, though, is that the first thing that the Treasury will do with this law is they'll go for the low-hanging fruit, which is the broker-dealer, the traditional broker-dealer, like the Coinbases, Geminis, come out with that. And so there were three really main things that I think came out of this bill. And the first one is that, again, cost basis, proceeds, all of the information that you need to file your return, these exchanges need to track that now and provide that to you. Second thing, and Nabil talked about this, right, is when we're moving, and this is a unique characteristic of blockchain and crypto. It doesn't really happen as much in any other asset class. But we move our assets all the time. Like, it is not uncommon to buy on Coinbase, transfer over to Kraken, later transfer it over to a hardware wallet, store it for a while, later move that somewhere else. And every single time you move that, you potentially can lose what your cost basis was. Because in theory, at least the way things work right now, Coinbase has no idea how much you bought something that you transferred from Kraken. Right? And if you transferred something to Kraken, they don't know how much you pay for it there. So the second thing that came out that I think is really important is the requirement for transfer statements. Now, this is already a requirement that exists in the securities world. When you move something from TD Ameritrade over to Merrill Lynch, like Apple stock, they are required to provide a transfer statement that says, hey, he bought this Apple stock on this date, he paid this much, this is the quantity, and send that over so that then when you dispose of it later, they have all the information to report your cost basis.
But how would they collect the other side?
Well, we'll get into that, because there's still holes in this. But it's important, because this is a good step forward to be able to have complete information at the exchange level. And so this is what's going, starting in 2023, these transfer statements will be required if you're moving assets between broker-dealers like Coinbase and Kraken. They have a requirement to communicate with each other what that cost basis is, and it allows for a much fuller answer. Now, to your point though, what happens if I go from a broker like Coinbase to a hardware wallet? Now, hardware wallet, there's nobody to report that basis to, and then you go back from a hardware wallet up to, Kraken, right? Kraken, now there will be a hole in the information, right? So what's really going to happen is on that 1099 that gets filed, there will be a blank space on cost basis and data acquired. That will still be on the shoulders of the individual filing to fill in that gap. And that's actually not unusual. There still are situations even in stocks and commodities where that happens. And so, but we're getting probably 90% the way there to make it much easier for people. The last thing that came out of this infrastructure bill was the requirement that, and this is probably the second most controversial part, is that anytime you move an asset that's worth more than $10,000 in the US, that becomes a reportable event. You have to fill out this form 8300. And just like government, governments are always, systems are several years older than we would like them to be, or maybe several decades older than we would like them to be. A lot of these forms 8300s, these were like meant for pawn shops and people who are dealing in cash, because that was originally what it was meant to do. It was like, try to catch money laundering and that kind of thing. But, if I went and, traded something at a pawn shop that was greater than $10,000, somebody's filling out a paper form and mailing it into the IRS. That means that there are systems that have to be updated to be able to accept these forms 8300 because, again, in the blockchain and in the crypto space, we move assets all the time, right? For tons of different reasons. And so again, it's going to be a pretty big lift for these enterprises to do this type of reporting. So I do see a lot of this as very positive, though, steps in the right direction, because what this is going to do, this is establishing like black and white, very clear regulation, which a lot of the institutional folks in the US have been waiting for. So we're talking, the Wall Street banks, and once they feel like it's clear and there's not a risk associated with coming in, I think we're going to see a lot more institutional adoption coming in, which will, I think, help fuel that next major wave of adoption. So, Nabil, I've been talking a while. I'm going to kick it back over to you. What are your thoughts?
I think we're getting there, but I think we still have a long road ahead. All right. Anybody bought SafeMoon in the audience? Huh? We got two people. How hard was it to buy SafeMoon? It was like 8 transactions in to buy one coin. And how many zeros did it have in front of it? Like 8 zeros. The accounting on buying and selling SafeMoon's gotta be hell. Like an accountant, it would take him 3 hours just to find out what your basis of SafeMoon was and how you got there, because you had to transact 4 times deep and then buy SafeMoon, which is 0.0000 of XYZ. And then when you sell it, you transfer back to Binance Coin, back to Bitcoin. It's just a lot of steps in between. So I think the government is working on it. And I think 2 years ago or 3 years ago, they asked that question on the 1040, do you own cryptocurrency, yes or no, even if you didn't do any trades? So they kind of started keeping a record of who owns it and who doesn't, so who are they going to chase after when you don't report it? But Derek and I were having a conversation about this. I think this year, this past tax year, 2021 is going to be the worst year to report crypto gains because no exchange is going to give a 1099, right? Explain that to me. I was very surprised when you said that.
Yeah, so Nabil and I were having a conversation the other day while we were getting ready for this, and what has happened in the past is that some exchanges have filed what they call a 1099K. 1099K was actually used for payment processors like PayPal, where you're a merchant and you collected so much money for them, and PayPal was the payment processor, and so you would get this 1099K with one gross number. Okay, that's it. And for some reason, a few years back, Coinbase adopted these forms to report anybody who hit this criteria for 1099K. But the problem is, these were capital transactions. These were not payments for goods and services. And so fortunately, they finally decided, hey, this is not the right form, we're not going to file them. But the problem is this created an audit issue for a lot of taxpayers because the IRS gets a 1099-K, and then they're expecting to see that same number on a very specific line on your tax return. And in this case, it would be on like a Schedule C, which is where you report self-employment income. But the fact is, where you report your capital gains and losses is on a completely different form. And so these automated matching systems that the IRS has in place, we're trying to match these together, and then they're sending these auto notices saying, hey, you didn't report this and you owe so much. Now, think about this scenario, okay? I can transact, I can only have, let's say I have $5,000 in crypto, right? But I trade, 100 times or more. That 1099-K that Coinbase filed might have showed $5 million of gross proceeds, okay, without any cost basis reported. So the IRS will then send me a notice saying, hey, you owe 30% on $5 million or 39% on $5 million. And can you imagine that, you're like, I lost money. I didn't actually make money trading last year. How do I owe this kind of money? And a lot of people just ignored it. Absolutely. And then they get the second notice saying, hey, we're now inviting you to tax court. We're looking forward to meeting you. And so, fortunately, this year is the first year that they have said, okay, we're not filing these 1099-Ks, but because of this infrastructure bill, and TaxBit, we filed 1099s on behalf of exchanges. We have a lot of clients who are doing like 1099 miscellaneous for staking income and rewards and other things. But a lot of our clients were going to file 1099-Bs this year, but then when the infrastructure bill came out, they basically said, well, that doesn't have an effective date until January 1, 2023. We don't want to voluntarily give the IRS more information than they should. And so to your point, I'll put you at ease a little bit. A lot of our clients who are the major US exchanges are at least taking a step forward where they're creating gain-loss statements that are similar to a 1099. So they're at least making a good faith effort to give you better information. Now, not everybody is doing that, right? But it's a nice step forward. So yeah, it's fascinating.
I kind of push the envelope as an entrepreneur, and I think that's my, I don't know, I think I enjoy doing that. So this year, or last year, now tax year, nobody's gonna get a 1099 from anywhere. How many people are really gonna voluntarily spend 8 hours looking at their transactions from every exchange, right? I don't think a lot. So I think IRS is setting people up to fail, right? They're used to getting 1099s from their brokerages and their exchanges, and that's their reconciliation on a personal level. So when they don't receive one, I don't know how many people voluntarily are going to pay taxes and do all the math behind the capital gain. My cousin runs an accounting firm, and he said if somebody brings me a crypto tax return, he said the starting rate is $2,500 because it takes time. The transactions, you can have 3,000-4,000 transactions that you have to reconcile. So is somebody just going to flip the coin and say, if I get caught, I'll pay it. If I don't, I'll let it ride, right? Because I believe the IRS is not setting up the correct structure as of last year for taxpayers to correctly pay their taxes. They didn't do it the year before either. The K1, the 1099-K wasn't the correct form. And I agree with Derek. Usually, if you're a partner or a founder or a shareholder in an S corporation or a C corporation, the profits get dispersed through a K1. That's what a K form is used for, and these exchanges send out 1099-Ks for capital gains, which completely, I believe, was nonsense. It was the wrong form, it was the wrong explanation of it. They weren't Coinbase shareholders, it wasn't a profit from the company of Coinbase. You were doing trading on Coinbase, and that was the, not the correct form. So I think it's gonna take the IRS a couple of years, and I don't know, 2021 tax year for crypto traders is up for grabs, in my opinion.
Yeah, but I think the important thing to consider too is that, a lot of early adopters of crypto love the anonymity. They're, ultra libertarian. They don't want, the government to have their information, and nobody likes to pay taxes, right? But the fact of the matter is, we are maturing as an industry. and we want to be taken seriously. And one of those things that you have to do to be taken seriously is you have to comply with those laws. Now, the laws need to be written in a way that you actually have the ability to comply with them. And I think that that is what the infrastructure bill is doing, is again, it's putting the responsibility on the exchanges to provide the information to the individuals so that it's not fully just left on the shoulders of the individual to figure out.
That's how it should be. Right?
Absolutely.
Every other industry in America operates that way.
Yeah, I mean, we have an honorary, tax system, right? In the sense that, you file on your honor. And, but it's kind of like the whole trust but verify system, right? 1099s, the whole point of those is when a 1099 is filed and, Coinbase sends it to the IRS and they send it to you, now you know that the IRS knows what you've been doing.
And you personally know, right?
Yes.
A trader that's been trading for a year, you can transact over $5 million with $5,000, right?
Yep.
So he knows personally too. So.
Yeah. So I think that this is a step in the right direction. We have to have good regulation to be able to report. We have to have this to be taken more seriously. And one of the big challenges that I see, honestly, is we know how active we are on crypto Twitter and crypto Reddit, and thank you.
Oh, thank
and
you.
one of the challenges that I think that we face is sometimes we shoot ourselves in the foot because a lot of the times people, who are making good faith effort, and I do think that a lot of our politicians and regulators are making good faith effort to get educated and to make smart regulation, but a lot of people get onto these forums and they just start going off, and and it's a challenge because we want to be taken seriously, and so elevating the proper voices is also a very important thing, and I think that's one of the areas that I see with the Government Blockchain Association is an opportunity to elevate the right voices so that we are, the rest of the world can take us seriously and recognize that we want to do the right thing, but that this industry isn't going away and that we're building and it's going to grow every year.
Yeah, me and Derek were talking about the presentation and we wanted to leave the last 10, 15 minutes for open discussion, right? May that be about taxes, capital gains, cryptocurrencies. We wanted to make this presentation a bit more interactive. So feel free to come up, ask your questions about, he's a brilliant tax guy. He works with Binance, Coinbase, all these companies regarding tax. I run a hedge fund. Even if you have a crypto question, don't ask me the price of Bitcoin next month, but I'll answer it. I'm not a lawyer.
Eugene Morozov, Everscale Networks. Thank you guys for a very insightful presentation. One particular circumstance that you may not have covered. You talked about people buying and selling. Okay, there's another kind when you create. So please talk about that, and what do you believe if a community issues token, what will be the tax treatment? Thank you.
Yeah, so I guess when I hear the term create, a couple of things come to mind. Number one, 2021 was like the explosion of NFTs, right? And so you have creators of NFTs, creators of pieces of art or music or whatever it is. When they sell those NFTs initially, that's going to be an ordinary income event. And again, I am speaking a little bit US-centric, so I apologize. I don't have every tax code memorized around the world, but I think it is pretty similar, in most jurisdictions. But to the question that you asked, what about when you're issuing a token for the first time? So that is a little bit more of a complicated answer because it really comes back down to, and I'm not a lawyer, but I work with enough lawyers that I can pretend like I know a thing or two. It comes back down to what rights do you get with that token, right? Do you have rights to future profits from the company that's issuing the token? So that looks a lot more like a security than it does a piece of property or something like that. And so that then maybe you need to follow all of the rules that the SEC has set forth for doing initial offering. Now, is it a utility? Does it give you the right to the future good or service that you will then be providing? So the answer really is it's a facts and circumstances situation. What do the rights of that token give you? And that's how the company who is issuing those tokens, that's how you have to look at it as well. Is this prepaid revenue, right? Prepaid services. Am I issuing equity in my company through this token? And so it's really about evaluating that. Any other thoughts?
I agree. That question is a $10,000 answer for Thomas, Cogent Law Firm. He'll spend 40 hours with you helping you understand your coin and what you're producing, what it's going to do. Like we have a future project for GBA token, which Tom helps out a lot on. There's just proof. Are you doing proof of work? You're doing proof of stake. How much is the founders holding? Who is holding the unmined currency, right? There's just so many deeper questions that are asked when you ask that question, and then the answers follow what you're saying. It's just, it's a very deep question.
Thank you. Kind of a loaded question here, but what about things like airdrops, where people are using them for like liquidity purposes and collateralizing it, and then also kind of looking at a lot of the exchanges now have debit cards that they're allowing you to utilize the crypto as free as currency, even though it might be, I guess in some cases labeled a security. And then the last part is in situations where you are using your crypto as collateral and taking out a loan on that, how do they verify that as taxable income if you are taking a loan to value on it, similar to what you do with a normal bank, like a line of credit?
All right.
Go for it.
All right, so the last one, right? You're talking about loan. Loans are not taxed, just like a 401k, right? You can put your 401k and take a loan against it, and that's not taxed. And that's the responsibility of BlockFi. They do a lot of lending based on Bitcoin. So I think Coinbase is starting it. So that's their responsibility not to report it on a 1099 or as capital gain or revenue. So I think that's pretty clear. Airdropping, that's still, I believe, very confusing. I don't think anyone reports airdropping. How do you report it? Say if I'm an individual, I don't have an LLC, and I think I own XRP, and I got airdropped Flare. That was a big airdrop last year. How do you report that? You can report that as, if I have an LLC, report it straight as revenue for your LLC, just revenue because you held something. But individuals, I wouldn't know. I mean, they would just have to report it on Schedule C as revenue come in as a bonus for owning XYZ. What are your thoughts?
Yeah, so back in 2019, the IRS issued a notice, or a new revenue ruling, actually talking about hard forks and airdrops. And it could be argued whether it was the right answer, but the answer that they have is that for an airdrop, it is an ordinary income event. And so when you receive that airdrop, you look at whatever the fair value is, and then that's taxed as ordinary income to you or your LLC, whichever entity is receiving it. Now, there is a case that's out there, and this is actually more akin to focusing on staking, but a lot of times the IRS will refer to staking rewards being airdropped to you. They like that term. I don't know that they actually use the term airdrop quite the way that the industry uses it, but one of the things in this case right now, they are making the argument that for staking rewards, that instead of being taxed right when you receive it, you really should be taxed when you dispose of those, because they are making the analogy to a farmer who has a piece of land and seeds, and they plant that seed, and all of a sudden you grow a crop. Now, that crop is not taxed when it's grown and ready to go. It's taxed once they actually harvest it and sell it, right? And so the argument is, what is the difference between I'm taking one property, which would be our base property Ethereum, and I'm going out and staking it, and I'm getting paid out these rewards. So I have property generating more property. And so there is a case that's happening. Now, I can't say which way it's going to go. I think it's in Tennessee, though. But that could have pretty big impact on the U.S. about how we look at airdrops and how we look at staking as well. So love to talk more about it, though. Once we're headed, I see that we're getting ready to have to get cut off here. But One more quick question.
Good morning, everyone. My name is Ryan Cooper, founded DeVille Crypto Solutions, and I have a question. I've been in crypto for about 6 years now, and I use Metamask, and I'm just curious how the IRS is going to go after everyone using, because there's no real KYC AML with Metamask, and I've used about 30 to 40 different exchanges over the years, and when I initially got in, I wasn't watching everything. I lost cell phones, laptops got stolen, so I'm not sure how to even report, some of this stuff that I'm doing, especially NFTs. I'm doing a lot of NFTs, the airdrops. It's just really confusing, and I don't know what I'm doing.
Yeah, I think the challenge, so to your first question about Metamask, Metamask is a software wallet. It's a team of probably 20 people. They are not in a position to do full KYC, for hundreds of thousands or millions of users, right? They are just a software, that you use. And so what you would probably want to use is, something like TaxBit, where we can connect your MetaMask wallet. We can do all of the valuation because we can pull all the pricing for every transaction. We can identify the taxable transactions, the taxable airdrops, and that makes it a lot easier for you. And not to make it sales pitchy, but the fact is, your situation is not uncommon, right? People who have been in crypto for a long time have accumulated, dozens of exchange accounts, have, dozens of wallets, and, hundreds of thousands of transactions, and you simply can't do that on your own. This is a technology issue ultimately. But the IRS, I can tell you, because we support them, so they'll come to us and outsource an audit, and we'll actually go through, and they provide us the data from the taxpayer, and we'll go through and do full analytics on it. But they have to give data all the way from the beginning of time. So for you, if you've been in it for 6 years and you unluckily get audited, you've got to go find all of that information.
Just to argue that, how about the exchanges that you were on 6 years ago are out of business? Where do you get the data from?
Yeah,
right.
It's a real problem.
You know what I mean? It's just so difficult. What was that one big exchange that got shut down? Mt. Gox, right? So people that had Bitcoin on there, A, lost it, or B, the company's gone. Where do you find that record from? Right?
Yeah. You just have to do your best with what you've got.
I agree. All right, I think our time's up. Thank you, guys. If you guys have any other questions for us, feel free to reach out to us anytime.